I worked formally from 1999 and the system spat me out in 2008. By the time you're suing your employer, now that is kufa dereva kufa makanga. If you sue your employer, you will never work again in this town. I started working for myself 16 years ago. It's now 16 years. And one of the first things I had to do was learn to pay myself. I gave up too much of my time in the last 15 years to helping other people solve their problems instead of focusing on my business. What was my first salary? I was earning 100,000 shillings.
This was in
1999.
This is in 99. That's a lot of money.
Yeah, it was a lot of money then. Yeah. It's hard to be a CEO without being ruthless. You have to be ruthless. This is a grenade. I'm removing the pin and I'm throwing the grenade. Marriage is an institution created to enable property ownership between two people. It's got nothing to do with love. If you're going to go into debt, I call it assets versus flossets. Get assets, not things that you floss with. Money shouts, wealth whispers. And I've got no attachment. I'm not
beyond the joy of driving a
yeah,
showroom
beyond the
car.
joy.
Let me ask, I've never driven a showroom car.
It's fantastic.
What's it like? Hey guys, welcome back to Financially Incorrect. I am your host, Barak, and it's a Friday, so we have a new episode out for you. This podcast, of course, as you guys know, if you've been listening to this podcast for a long time, is proudly sponsored by FX Pesa. FX Pesa is coming to Uganda. So please tell us who you'd like to interview. We went to Tanzania last year. We interviewed, I think, 3 or 4 different entrepreneurs. So please tell me who we should cover in Uganda. I think we're there first week of April. Second week of April. So please let us know who we need to interview, and we'll try and get that done and try and get some Ugandan money stories for you guys. There are many millionaires and billionaires there purely because of their currency. It's going to be similar to the Tanzanian story. Anyway, today's story, I've been looking forward to this. It's been in the books for, I think, 6 or 7 weeks now because of, I think, how busy her schedule is. We have Carol Musyoka with us, who is a provocateur, a nitpicker, if I got that correct. Nitpicker, nitpicker. And all in all, good vibes, right? So really looking forward to having this conversation. First of all, welcome to Financially Incorrect.
Thank you very much. Great to be here.
Have you talked about money before?
I talk about money all the time, Barak. I talk about money all the time with my accountant because we run a business and we've got to pay bills.
Yeah.
I talk about money with my daughter. She's 21 and a half. She's turning 22. She's in university, 3rd year, studying computer science and learning to manage her own funds because she's not in the country and she's got to manage herself. So, and she's done a fairly good job. I talk about money to my 14-year-old who needs to learn a thing or two about about money.
Okay.
And
but publicly to like third parties?
No.
Not really.
I don't. Well, when I started, so I used to be a banker and then I started my own consulting. And one of the things I used to work with, especially with ladies and with chamas and everything, is just about saving and being able to, I worked formally from 1999 and the system spat me out in 2008. So how many years is that? Almost 10 years, 9 years. Yeah. So I was worked for about 10 years and then started working for myself. And Barak, you can only work, this is what I tell people, you can only work for yourself when you've built significant runway and savings that allow you to take the time out to say, okay, this is what I want to do. This is what I never want to do. If you don't have that runway, and that runway means about 6 months of being able to maintain the standard of your life as it is, then you should be okay. So my rule was, when I was no longer going to be able to buy, my rule was, it's a silly rule, and I even feel embarrassed saying it, but I'm just going to say it. The day that I couldn't buy Kellogg's cornflakes for my daughter, I only had one daughter at the time, then I was going to go back to work.
And that day didn't come?
That day didn't come.
Okay.
That was my SI unit. When I have to go and now look for a cheaper brand, yeah, right. Exactly, yeah.
Okay, I think that's a fair rule. I think it's a good one. I like it. I mean, 6 months runway. I think the Kellogg's analogy brings it home. So I usually start this podcast like left field, like non-money related. So that's where my first set of questions is gonna come from. So the first one is a tweet I think you put out like I think it was earlier this week or last week, or maybe I'm wrong, I don't know, but a tweet you definitely put out. And you said, nobody in your generation, there's not a single person you've met in your generation who introduces themselves as Mrs. So and so.
Guy, that is not last week. That's a tweet of like 5, 6, 7 years ago.
Is it?
Yes.
Oh my gosh.
So which Twitter? In fact, you're on Twitter. You're not even on X.
Yeah, I'm still on Twitter anyway, but that's a tweet I found, right? And
Yeah.
I'm curious, what do you think it is that changed that sort of mindset?
Our parents, so I believe, Barack, were from two different generations. So I'll say that my parents' generation, my mother and her, and mom, please, if you're watching this, forgive me for this, but for them, getting married was critical. It was a social achievement. And therefore, they took great pride in being recognized as Mrs. So and so. And then, consequent to that, Mama so and so, Ninawa so and so. You know, it was a very big thing for them. Then you got social acceptance. The generation that's come, my generation that's come in after, quite a number of my friends are not married, not even interested in being married. The ones who are married, more than half are divorced. The ones who are still married have forged independent identities from their husband. You know, they're working, they're professional career women. And so do not identify as Mrs. First or Mama so and so first. You identify as a professional. You're recognized for your professional achievements in addition to being recognized as maybe wife of so and so and mother of so and so. So it's a classic example of how generation has shifted to our generation not necessarily requiring recognition of being married to so and so. Not that there's anything wrong with being married to so and so, but that's not your defining.
It's not what makes you you.
Monica. Yes.
Right.
Yeah.
Okay. That's fair, and I think a good answer. You've just talked about, I guess, what marriage looked like, what marriage meant for a certain generation, and how that's changed. In our sort of, you've heard me talk about Love and Money. We have an event around Love and Money. By the time this episode goes up, the event will have happened, which we will give you complimentary tickets to come for. It's on the 29th of March.
What does Love and Money look like?
It's the answer to that question is so long-winded, but it's
Keep it short. Keep it at 180 Twitter characters.
Love and money are two of the most important things that you need in this world, and nobody teaches you about them. And we want to explore that, basically. Simple, right? With another podcast that is, I guess, specializes on love.
And are the two mutually exclusive?
That's what we're essentially going to talk about, where the intersections, where they meet, their origin, marriage, the economics of it, all of that. That's where we're going to go. So my question is coming from, there's a video I put up, the promotion of this event, around a lawyer who was talking about how, leading up to the wedding season, you talk more about the cake, you talk more about the decor, you talk more about all these good things that are supposed to happen, and not talk about the financial consequences of you getting married and what that means if you ever get to a point where you need to separate. What that will mean for your finances and the partner's finances and etc. And that's a more critical and important discussion and requires a lot more time than you discussing about the cake and the decor, because that's going to come and go. But this one is a looming thing that will stay. So based off of, because you've talked about being a single parent, based off of your experience, do you think that conversation would have made a big difference in the way you executed your life with regard to marriage?
I'm a big proponent. I'm going to throw it. This is a grenade. I'm removing the pin and I'm throwing the grenade. Marriage is an institution created to enable property ownership between two people. It's got nothing to do with love. You shouldn't have to have the government come into a romantic relationship. Why is the government coming into a romantic relationship? Okay, you two love one another. You love one another, and you can love one another until you die. Okay, the dick is one of two mammals that
mate for
partner life. That mate for life. Yeah. You don't see the government in that relationship. You know what I mean? So, marriage, in my view, it was created so that we can be able to own property together, so that in the event of your death or my death, there is a structured way in which that property will continue to be held, and will be able to take care of the assigns of the marriage, being the children. When you go and you sign that, because marriage is a contract,
Between
It's
two.
essentially saying it's me and you, it's this man and this woman. And so any other interloper into this relationship has got no, let me use a legal term, locus standi, has got
Yes.
no claim to anything that the two of us build. And in the event that they do, they come and they make a claim, then they need to figure out, then that will come up because of the law of succession. You're a lawyer, so you understand what I'm talking about. But there is no reason why we should come together and get this contract when we are in love. Now, if we are now going to come together, we're in love, we now start to create property together, then we need to define upfront. Now, with the premise of hindsight, I'm like, we need to say this property that we're holding together, what do we want to do with it? Do we want to do it for business? Are we holding it for our children? What are we going to do? And therefore, should we then create a company? Because it's an asset. This asset should be generating an income. And therefore, let's create a company. And this property should then be held in something that promotes the holding of assets in order to generate an income, where that income may be passive income in the form of rent and or appreciation. So if we're holding land, we buy land, we put it in the name of the company so that we get capital appreciation. You and I are the shareholders. When our children come of age, when they turn 18, then, so that now we're very crystal clear what are we doing here with this property that we're coming together. But if we're not doing that, we are going to sit here and pretend we're in love. You're making money, me, I'm not making money. Then all of a sudden you bring a squeeze over there. Then now she has kids, I don't have kids. Now the kids have got a claim. It becomes a hot mess. So don't get me started on the marriage. And,
Basically, based on your premise, we don't use the marriage tool effectively, almost, and using it as a love.
It's not love. Marriage
it's like
not
the way that it's the way it's designed in our society. It's not for love.
The way it has been created as a fiction of law, as a function of law, it's not for love, it's for property. Let's go back to tradition. My great-grandfather, for example, on my father's side, had like 90 wives. Wasn't love. It was, we need to, the more wives you have, it was a sign of your wealth because the man was a provider. So you can create homestead and then your wife gets children provide labor over your properties and farming and all of that. Now, did he necessarily love? Maybe he had one favorite or another favorite, but did the government come in that relationship? No, and was not required to come in that relationship. But society had a way of holding him to account. We had the traditions for him to follow marriage. He had to provide. The children were recognized. There was a beautiful system of the mother was a mother to all. At the point for if they were going to separate or go their separate ways, again, the tradition had a way of separation. The tradition says the children below 12 uncircumcised boys would go with their mother, okay, because that's the society that it was there at the time. Uncircumcised boys and the girls would go with their mother. So it was a matrilineal as far as children. But if there were any circumcised boys, they were now part of this. I mean, there was a whole system. Again, the government wasn't in
involved.
it, right? If there was property, what she would go with, all right? Her parents would return the dowry. I mean, there was a whole system to it. Now it's
it is what it is.
It is what it is, Barack.
But that's really interesting. I've never thought about it like that or had anyone provoke that kind of thinking. And that's interesting. That's interesting that we essentially misuse the technology of marriage in the way that it exists now. Anyway, I guess sort of moving on from that, because I guess in modern marriage, so to speak, we have co-CEOs, so to speak, right, in leading a life. And this I'm asking you both from your previous experience and you as a person who deals with boards and leadership and things like that. Do you think a co-CEO system works?
What do you mean? Now you're throwing a grenade here. What do you mean by co-CEO?
I mean two people making... I mean, it means exactly that. Two people who are both equally in charge of the decisions of an entity, be it a marriage, be it a company.
So you're talking about the modern marriage. Now, if you were to ask my great-grandfather that, he's not alive, I didn't see him. whether he would ever have considered his 96 or so wives co-CEOs, he'd have fallen off his stool,
Right.
laughing. Co-CEO of what?
Yeah.
He is the head of this home. The problem, this is my personal view, that we are having in this African construct is that we've brought a Western premise in the form of marriage where you're both equal and therefore you're both contracting as equal into an African construct where the man was the head of the home and the provider, and the mother was the nurturer. She typically wasn't working, okay, but she was expected to maintain the homestead, to take care of the shamba. You know, she had her role and she had her role to play. And truth be told, in functioning marriages, you tend to see that the mother then starts to actually become the de facto head of the home. You know, and I remember growing up, you know, when it was time to go out, we went to go to the club, you know, my dad was, yes, the head of the home, but you go to him and like, Dad, you want to go to clubbing? And he look at you and say, what? Go and ask your mother. You know what I'm saying? Some things he's not in charge of, okay? And so we've now moved from bringing that, we are inherently African, to where now the modern marriage where we're both equal because we're both earning, in some situations where the wife is even earning more than the other. So what happens when there's that financial imbalance? It's very sensitive and very difficult, and we are struggling with it as a society because we do not have previous generations to look up from and learn from. Remember what I told you, the traditional African marriage had its systems, its systems for resolution of dispute, marriage, children, divorce, all of that. The community had a way of doing it. We are a communal society as Africans. We don't have that system today. And that's why we're struggling. And that's why our divorce rate is through the roof, because we don't know how to navigate in this modern world. And yet we are operating within an African construct. That's why we're struggling. That's my personal view.
I like that. That makes sense. What about from a corporate perspective?
In what way?
Co-CEOs, essentially just that, having co-CEOs and saying, for this company, let's say we have a company X, we have two CEOs leading this organization.
Are you saying, can that happen?
Can it? No, I know it happens. Does it work? What's your?
It doesn't. I don't see that. I mean, I've seen CEOs and a chief operating officer who's like the de facto deputy CEO, or in the very rare occasion you'll see a founder who prefers to take a step back and allow somebody to come in and be a CEO because the founder is a creative and just wants to be on the creative side and have a CEO who's the face of the company. You know, a CEO never rolls up their sleeve. You never see a CEO writing a report. A CEO is a stakeholder manager, manages stakeholders, shareholder, regulator, key suppliers, employees, customers. I could go on and on. That's the work of a CEO, to manage all of these, some more than others, on some days more than others. But that's the work of a CEO, is to manage stakeholders, shareholders. When you've got your founder who prefers to take a step back, and then you'll see maybe, and I've seen that, and a good example would be, I just watched this movie, Blackberry. I don't know if you watched it on Netflix. You need to watch it. It's just a story of the rise and fall. And the founder, who was a creative and he was a geek, a nerd, and he just wants to create and has got no interest in day-to-day. He doesn't want to deal with engineers and accounts. I have no time for that. So would prefer to take a step back. You can give me the CEO or co-CEO title, so like for purposes of optics, but me, just let me create. So to be honest, in my view, there's only room for one honcho, and I don't see how in a corporate you'd have
it sort of works.
No.
Okay.
No. If you have a functioning corporate, then you've got sort of a chair and you've got a chairperson, and your chairperson ideally should be a non-executive chairperson, meaning they're not in the day-to-day. So again, that's two centers of power. You've got your chairperson who chairs the board, and then you've got your CEO who looks after management. In situations where you've got what we call an executive chairperson, meaning that they have got control over day-to-day, now that becomes a little bit dangerous, because then you've created two centers of power. The American system of companies, you have the CEO is also the chair of the board. All right. But what happens when you have an executive chair, you've got two centers of power. The minute you have two centers of power, you're immediately creating room for clashing with your management, because they'll want to align with where they see power.
Okay, I think that's an answer. It's an answer to the question.
It's a long-winded answer,
Yeah,
but I
but
think
it's
we
an
got
answer to
there.
the question. Yeah. Okay. This I wanted to ask you again, based off of the research I did. What happened to Nakumat?
I can't answer.
Like, based on what you can say and what the insight you have and the expertise you have of leadership management, and like, what is it that they did?
So let me speak about Nakumat in the context of most of the supermarket chains that we have today, right? You have a founder-led business, and the business, so you, Barak, start a business, and it starts growing, it's doing very well, and you now professionalize. Before you had a bookkeeper doing the accounts, now you realize, your turnover is growing, you figured 100 million, now you need to bring in a CPA. Before you had a guy who was just CPA 4, you bring in a qualified accountant to do that. Then you start to realize you've moved from one branch to 2 branches to 3 branches. Now you need to do logistics. You need to should you have centralized sourcing and then a centralized warehouse? How do you move stuff to the branches? Now you need a logistics manager. Now you need to have a HR person, because now your staff have moved from 50 to 100. With each HR person, with each staff member, that's a contract. You've got 100, you've got as many contracts as you've got employees. And if you want a company, one thing that can bring down a company is if you have a badly managed human resources, because those are contracts that need to be managed within the law. Labor laws in this country are really rigorous, and they can bring down an organization and have. Anyway, long story short. So your company starts to grow. Now remember, you are just the founder. You've never managed a business.
Yes.
First, you're just turning over 10 mic. Then you start turning over 100 million. Punde si punde, you're turning over $1 billion. Now, the skills required to manage a 10 million business are not the skills required to turn over a 1 billion. Then you start turning over 10 billion. Then you start turning over 30 billion. By the time Nakumat was going down, they were almost 65 billion. So that's an enormous organization. And the skills required at that level are at international level. You are getting people who essentially can work across the globe. That then requires oversight. All right? Because you're turning over billions, and these billions, and there's a difference between, we once had a client when I was in banking, and I remember one relationship manager saying, this client doesn't know the difference between turnover and profit. Profit is what the shareholder goes away with. Turnover belongs to the organization. It's what your customers are paying you, but you have to pay your suppliers, you have to pay your employees, you have to pay the taxman.
Yes.
So that at the end, once you've paid everybody, that little remaining profit is what goes to the shareholder. A board helps you keep that separation between, and keep the business in control, and keep that in mind. Now, if you don't have a board, if you don't have somebody keeping you honest, it's very tempting to confuse turnover
for
with profit. And therefore to siphon funds out that should be ideally paying suppliers. Now, a supermarket business, and this is something that you see across most of the supermarkets, it's cash business.
Yes.
Yeah. The longest time you have is maybe T+3, and where 3, because no one, you, Barak, when you go shopping, do you ever write a check? You never write a check. It's cash or M-Pesa.
Yes.
At most, a credit card. Credit card maximum days receivable from the bank that's the merchant bank that's paying you is 3 days. So your days receivable is 3 maximum. And most of their turnover is about 90% is cash and or debit card. And that is you receiving it immediately. It's very easy when you're paying your suppliers after 60 days or after 90 days to play with the money. It's extremely tempting. And if you don't have controls, then you will play with that money. I used to work in a bank where we gave out loans and we got third-party financing to give out loans to farmers. So I remember looking at that entire book. It was Farmers in Mwea, and that entire book had gone bad.
Right.
It became a bad loan book. Why did it become a bad loan book? Because we were giving money to farmers ostensibly to grow tomatoes. Tomatoes take about 90 days from when you plant the seed to the time you harvest, let's say, all right?
Right.
But we're giving these farmers 6 months to repay us. Do you see a problem with that, Barack?
So they have a window of between the 60 days to the
Thank
6
you.
months.
Exactly.
to-
So you plant the seed, day 90, you harvest, right?
Yes.
So ideally, because tomatoes do not have a long shelf
Shelf
life,
life, yes.
you should be selling it
Yes.
as it's coming out. So on day 90, so January 1st, you planted, March 31st, you harvested.
Yes.
Maximum by April 7th, all that stuff needs to be out and you've been paid.
Yes.
Because these guys come to your farm gate and they pay you cash.
Yes.
Now you've been paid. Now the bank is saying, don't pay us on April
us in
7th.
June.
Pay us on June 30th. Yo, come on. What am I going to do with this money? See, I'm going to go to the Rev. I'm going to whatever.
Yeah.
I'm going to look at deploying it somewhere else
Yeah.
where I may or may not make a return. So that entire loan book went bad. And remember sitting and talking to the relationship managers and asking, well, what was our thought process? They're like, well, you know, the guys who gave us the money to on lend didn't tell us to time it. So that's the same thing with your supermarket. So go back to the supermarket. You've got suppliers, you're giving them 60 days that you're going to pay them because you want to play with the money. And ideally, if you look at some of the best global supermarket chains like Walmart, they make more money from their treasury function, meaning how they deploy that turnover, than from the margins that they make from selling product. Because they just deploy. They're always lending. They're always lending the money out or putting it in money market.
So you're
or putting it-
using those 57 days to make more money.
100%. Insurance companies do the same
Yes.
thing, right? They take your premiums. You remember they've done their actuarial
Yes.
calculations. They know this loss might happen. It may not happen. So if for every 100 cars, maybe 2 or 3 are in an accident, these are the 97. This money, we deploy it. And that's why insurance companies are some of the biggest players in treasury bills and the biggest players in property as well.
Yes.
Because you're just sitting with a ton of cash.
Yeah.
So that's what happened with a lot of the supermarkets is you get this cash, you don't have oversight over it, so you start to deploy the cash elsewhere. And as and when your supplier payments are coming due, you're not paying your suppliers on time because you've put the funds elsewhere.
And the return doesn't come back. And then now you're in
And
a mess
absolutely. And then you're in a hot mess.
thereafter.
Yeah.
Okay.
Yeah.
I mean, that gives me context without giving me full context as to what happened with.
That's what tends to happen with the
Nakumatt.
supermarkets. Yeah.
Okay. All right. I guess moving now to your story, right? And you. You've talked about, I guess you've given like a little bit of a snippet of how you grew up. What was money like for you in your home when you were growing up?
I grew up in a middle class home. I've said this a number of times. My mom was and continues to be an excellent saver and taught us a lot about saving. And today continues to be my SI unit in terms of she's retired, she plays golf, she travels, and all of this she does from her retirement funds. She doesn't rely on her children at all, pays her medical insurance on an annual basis, buys her car, fuels. Just her whole lifestyle is financed by her retirement fund. So she saved very, very, very avidly and has taught us as a result in terms of how to save, how to invest in the stock market. So she's a great stock picker. So she picks blue chips and she picks those with dividend, with high dividend yields. And of course, putting funds in long-term government bonds. So I've learned a lot from my mom in terms of what retirement looks like. And I, from an early age, very, very early age, from when I started working, one of my cousins actually taught me this. This is something message I learned from my cousin, which is for every 100 shillings, there's 30 that goes to the taxman, for those of you who are in the 30% tax bracket. Of the 70 that remains, 30% should go into some form of saving. And it's a direct debit. It's a standing order. Don't even look at it. And with every pay increase that you get, you increase that standing order to that. So that you're used to just operating with this. So 30% of that 70% should go into a savings. Then you've got the balance to play around with and to now do your lifestyle. I started working for myself 16 years ago. It's now 16 years. And one of the first things I had to do was learn to pay myself. So my business paid me a salary. Maybe it pays me more now than when I started. It was very little.
Yeah.
But I had to get into that habit of the business paying me, because the business had to, I learned, pay for its costs.
Yes.
And the CEO's costs tend to be the highest. But so that when the business was not paying me a salary, then really, am I in the right business?
Yeah.
And I had to work very hard to ensure that this business can afford to pay me. Because if the business cannot afford to pay me, then
You're in
we have a
trouble.
problem.
Yeah.
A very, very big problem. Yeah.
Okay. So I mean, you go to boarding school, Kenya High.
Yes.
When do you deal with any sort of pocket money, or you start managing your own money, whether you're given it by your parents or you start earning it?
I think I started, Poco, I was in boarding school for all of 4 terms before boarding school spat me out. My daughter tells me I probably had ADHD. She's diagnosed me as a problem because I was very, very naughty. So I was kicked out of boarding school. But I would say I started dealing with money, not in high school, but in university, because I went to University of Nairobi, I went to Paki. And in Paki, the food in the dining room, I know you were in Paki
Yes.
as well. The food in the dining room is for death.
Yes.
So, we used to have to go to Wabogo's. Do you remember Wabogo's? Wabogo's was that kiosk across the street.
When I was there, the chip shop was at where the petrol station, where the Java is now. There was like a chip shop over there.
Oh, there's a chip shop there.
Yeah.
We didn't have a chip shop. We had
Yeah.
the chip shop in, because we used to sleep in Maine. So there's a chip shop in Maine. So it was, now how do you manage your pocket money? Because we had boom. At those days, our boom, when I joined, the last A-levelers were still in university. So they used to get 50-40. But by the time we were joining, Higher Education Loans Board was now a thing. So we were getting like 7,000. So depending on your lifestyle, whether you're going to the Rev or not, you have to manage the 7K. Then you're getting a little bit of pocket money from your parents. And then we'd work, or I used to work during the holidays and now save that money, because you're still living with your parents. So your expenses are minimal. So I'd say my first lessons in terms of saving money and how to deploy that money were in Paki. But we're in campus. But what were we spending our money on? We used to go to Gekomba. First, we used to go to, because Gekomba now we used to get Mitush. So Gekomba now is when you're going now granular, First we used to go to, I'm trying to remember where it was more upmarket, because Toy Market wasn't a thing then. Ngara. We used to shop in Ngara for Mitush. Then we came to discover you can get it even cheaper when you go to gigs. But in gigs, Mitush wasn't as organized as it was now. Now it's very granular. The high-end ones, the guys who do only white linen shirts, the guys who do whatever. It wasn't that organized. And we're talking about in the early 90s. So when you go to gigs, you have to be ready. It used to be called Sunshine Boutique to then now go and,
Right.
actually sift through those bales.
Right.
So yeah, I guess it was campus.
That's where you spent your money.
Yeah.
Okay. So but like nothing significant. You didn't have like any big dreams of things you were saving for, like you wanted to buy a car
In
or
campus?
a trip. Yeah.
Oh no. I think the only trip, in December I had my deep pal, so we used to go to Costo for that Christmas vac and everything. So of course we'd want to save, because we'd want to whatever fuel and money for the rev. So that's the only thing I'd say we'd save for, but nothing big. Yeah. Our dreams were so simple that was in the 90s. It wasn't like now. I'm so glad I grew up then and not now, because I think now when I see what people are aspiring to at a very young age, you're like, hey, I wouldn't have been able to make it.
Yeah.
Your syllabus in nowadays.
Okay.
Yeah.
So how do you even end up in banking? How do you end up in your first job? And what are they paying you when you get your first job?
We're going the pay route.
We're going there, yeah.
So, look, went to campus, graduated as a lawyer, decided to do my master's, went to the US, did my master's, worked for a year in the US, in Washington, D.C. for a PE fund. And the money that they were paying me was just enough, it was just enough to pay rent. First I lived with a friend, then I lived with a cousin. It was just enough to pay rent. But I wanted to come back for my December holiday. Those days summer bunnies were a thing. They still are now. At that time, they were a thing.
Yeah.
So I wanted to come back in December for my vacation. So I had to save for my ticket, and I had to save for rent for that December when I would not be working. So I took on a second job at this big department store called Lord and Taylor. It was, it was like a Nordstrom. If you're familiar with the US market, there were the high-end department stores, sort of like a Harrods, what Harrods is in the UK. So worked at this department store and absolutely hated it. But I had to do it because it was the extra money. So I'd work at the PE fund from 8 to 5, and then I'd take the train, get off the train station, take a bus to the mall where this department store is. And there you're paid by the hour, and that was minimum wage. It was $5.15. And that's before tax. Then there's this federal tax, and then there's a state. Anyway, long story short, but managed to get enough money to pay my ticket and pay for the rent.
Yeah.
Yes, and do that.
So do you come back and just decide I'm not going back to the US?
Yes, no. So I graduated, did my 1 year what it's called. They give you a 1 year visa if you've got a US student visa. They always give you 1 year to work. They call it OPT. And then, so I finished that. And I was very clear in my mind, me as coming home. The way people wanted to stay in Stato, I'm like, for who and for what? What is this life? It's a hard life. And because I'd done undergrad in University of Nairobi, it was very hard to get jobs because guys are like, what is University of Nairobi? Now, my colleagues who'd gone to Stato for their undergrad weren't having that problem that I was. So for me, coming home was not an option. So came back and was very lucky because I had my degree, my master's degree. I joined Citibank. In those days, Citibank were looking for people who had worked abroad in Maju and could talk Kisungu Menge. So that was a big, that opened that door at Citibank. So I'll never forget, I landed Sabasaba, July 7th, 1999 was when I landed in Kenya. And by August, I was working at Citibank. I'd gotten the job at Citibank as a relationship manager, nothing to do with law. But because I'd been interested in the finance side, got straight into corporate banking and didn't look back. What was my first salary? All right, my first salary, I'll tell you. I was very proud because I got, medical. So I was earning 100,000 shillings.
This was in
1999.
This is in 99. That's a lot of money.
Yeah, it was a lot of money then.
Yeah. I mean, even now, if I was to do the rate of inflation, like it's a decent.
It was because I went in as a management trainee type at that level.
Okay.
But it allowed me to, at that time, to get a car.
So immediately you get the money. Do you buy the car? Do you take a loan? Do you save for the car?
No, at that time I bought a lemon of a car because I couldn't believe it was. Let me tell you, that thing was a lemon. You could hear it before you saw it.
Yeah.
Okay. Because I wasn't allowed, those days you weren't allowed to get a loan until you'd worked for 6 months. Yeah, so I bought a lemon and drove a lemon for 6 months. And then I could get a car loan.
Now, like a decent car.
Yeah.
Okay.
Yeah.
So what were your financial, I guess through this first job or through this first phase of your life with this first job, what are the financial things that you were thinking about? Do you then set immediate goals and objectives or things you want to achieve?
Great
or do you just go with the flow?
In the banking industry then, and I think still now, bankers, if you notice, one of the people, I was really sad to see that there are only 35,000 mortgages. When I left banking in 2008, because I started writing, when I left banking in 2008, there were only 19,000 mortgages in the whole of Kenya. And now there are probably about 35,000 mortgages. Not that many. Probably it hasn't even doubled.
Yeah, it hasn't doubled yet.
Having said that, those 19,000 mortgages, the bulk were bankers. Because bankers, we get, when people are borrowing at 29%, 25%, you're borrowing at 5%. So very quickly, very, very quickly, I got to understand most of my colleagues had houses. So and there's that peer pressure. So even those days, it wasn't about getting a car. It was about, when are you going to get your first house?
First house.
Yes. That was the pressure then.
Yeah.
Is because quite a number of my colleagues, Citibank had a lot of lifers, people who had been there for a long time. Quite a number of them when I joined, had been there for 10, 15 years, were like on their second, some of them even on their third houses. And once you've bought a house and paid it off, there's equity. Okay? And we call equity meaning that you've got capital in that house that you can release by borrowing against it to purchase another house. And that's what a lot of them were doing. And then you borrow on that, pay it off, and borrow to get another house. So by the time I was leaving Citibank, I left it at the end of, in 4 years' time, and moved to Bakile. Now in Bakile, Citibank was only employing graduate employees. when I joined Barclays, a lot of the people who I found there had joined Barclays straight from high school, from Form 6. So they were the same age as the guys in Citibank, but they had probably like 4 years more in terms of working. And these guys now,
So what would they do? They would do like apprenticeship programs as opposed
no,
to.
yeah, you just go in an apprentice, so straight out of high school, because they were joining in the 80s, in the early 90s. So you'd go in, join as a cashier, and work your way up. So these are guys who are like on house number 6. These are guys who own blocks of apartments. And in fact, when I eventually became corporate director, I used to tell a number of them who used to work in my team, I said, understand one thing, I'm not the boss, you're the boss. Your personal portfolio, by far, I will never be anywhere near it. And these are guys who had learned the power of leverage. So they buy a house, finish paying for it. And the thing in those days was you buy a house in a place like Komarok or Kayole and finish paying for it. And the guys in Barclays, more than the guys in Citibank, would buy houses. Their first houses weren't necessarily places that they would want to stay in, but had no problem buying, because that is where their salary allowed them to buy a house, because they had seen the power of leveraging. So you buy a house. In those days, a house in Komarok was about three mic. You pay it down aggressively. You get a bonus. You pay down as aggressively as possible. What do you have? A house. Within 3 years, you've got 3 mic. You can come to this same bank, which is giving you a loan at 5%, borrow against it.
Yes.
Buy your next one. So these guys, by the time you're getting the third one, now you've got so much capital that you can now borrow and put up flats. And they're also buying broads. And they're using their Kenya Banker Sacco to buy plots and putting up units. One of a guy I worked with, we used to really, really laugh when people are buying nice, expensive cars from CMC. He had a Honda CRV. And his Honda CRV, he used to buy cement. Okay? Put a cement in the boot of the car, drive to site. So when us guys were going for lunch in our nice restaurant, this guy, let's call him John for purpose of this, because if he's watching this, he'll know who I'm talking about. Yeah. John was driving to Mjengo, to site. He had a spreadsheet, and he was just building he had put up apartments, and he was putting this up in Gong. And so when the rest of us were operating your Kawana apartment in Kileleshwa, a guy is operating 2 blocks of apartments in Gong. And he's earning less than you.
Was this institutional knowledge? Was it a thing that any of the banks, or even now, that banks tell their employees, or is it just things that employees do and you hear about it and you 100%. Just move on?
You see, because you see your colleague here, you see how he's operating. So you're like, Ati, what are you doing? So somebody comes, typically when people are selling apartments, they'll come and they'll do it. And a guy will be like, I can't buy this. Me, I'd rather buy Uko in Kiserian, in Kitengela. Let me buy this, let me do this, let me buy and build and everything. And so you start to get to learn from your peers and to start taking advantage of the loans. Because as a banker, you've got access to very many loans. That's not to say that there are the ones who are very careless. Bankers are some of the most leveraged people. As corporate director, when I was a corporate director, the number of debt write-offs we had to give staff because we were having, what do you call this guy? These guys who are, please pardon my French, ball busters. Okay, the guys who are coming to, loan sharks. Huge number of loan sharks, because bankers are extremely over-leveraged. So they'll be borrowing. So we had a number of loan sharks who are coming and going to HR and saying, this guy owes me money. Like, what the hell is going on here?
Yes.
I came to discover some of my own staff were the loan sharks. Okay? A guy's opening his drawer. You're seeing post-dated checks of colleagues. Guys have borrowed from him. He's become a loan shark. What the hell?
Yeah.
He's running a bank within the bank.
Wow.
Yeah.
I have a lot of
questions.
Like a lot of questions. Because it seems like, especially like 80s, 90s, like Malcolm Gladwell, I think in his book Outliers, talks about the right time to be something and your ability to succeed. It feels like that was the right time to be a banker, because if you make the decision to go to uni, or you're taken in at one of these banks straight out of high school, meaning that in 3, 4, 5 years, when this guy is finishing uni, I have a house. And
If I'm smart.
If
Not-
I'm
not,
smart,
Not everybody
right.
was smart.
yeah.
Not everybody was smart, because there's still also those who would borrow for lifestyle. All right, and that goes on until today. I can show you. There's been now that I've been in the industry and I've left and everything. I can look, and you can just look at the way somebody's, what car they're driving, how they're dressing, and everything. You're like, this guy is so leveraged, and he's living in Runda, and this guy has got no 2 shillings to rub. He's probably maxed his credit card, maxed the number of loans that he can take. All right, so that he can drive a big car and live in this big house and take his children to expensive schools. I worked with these people. I still see them until today. And if they are, what we say, just one paycheck away from
Disaster.
absolute disaster. They're there because they've got to maintain a look.
Right.
Yes.
So what path did you take?
So my job. So in Citibank, by the time I was getting to manager level, the bank buys you a car, which was great.
That's yours.
Yes.
Okay.
So that's for you to use, and it's replaced every 4 years.
If you leave, you don't give it back to the bank. Like, you go with it.
No. So this is what happens. The car belongs. So at Citibank, how it worked was the car belongs to the bank. In 4 years, it has been depreciated from a book value. Yeah. So at the end of year 4, you can buy it for the book value, and you get a new car. All right.
Okay.
And this was available to you from when it was 3.5 years. All right. So it was a great way of you driving a very nice car. Every 3 years. And then therefore you can now apply your funds to savings. So I remember my mother's daughter.
Yes.
All right. So I left Citibank and then moved to Barclays. So in fact, by the time I was moving, because the bank is not interested in that car, they're like, do you want to buy the car? Okay. So I took a loan at Barclays and bought the car. But by the time I was getting out to a very senior level and I was leaving the bank, this car, I had a Touareg. So the first car was a Subaru, got a showroom. The second car was also a showroom. I had gone to CMC and I'm like, okay, I want this one. But by the time I was leaving Barclays, I don't want that car. But because the bank was on that was servicing it.
Yeah.
Do you know what the service of a Touareg is? By the time or even just one tire. So I was leaving the bank and I'm like, take your car.
Yeah.
Take your car. And my sister at that time had a car that she was saving for her son, which one door opened, one door didn't open, one window opened there. So the door that opened, it had a non-working window and everything. So that's the car that I took now when I was shifting from one bank to the other bank. So by the time I was moving out to the next bank after I left Barclays, I left them with their car, with their Touareg.
The Touareg, yeah.
But now by this time, you're moving to a second bank and you're like, now you're on first name basis because you have been at CMC. So I called CMC and I'm like, I want another Touareg. I didn't even go. I didn't go to the showroom. I say, you guys issue an LPO. I want color powder blue. The other one was dark blue. Now I want powder blue. Because you can. And you're like, I'm enjoying driving showroom cars, But that's all it is. You can't afford to maintain them. And when they left now the second job, at this second bank, I was like, again, here are your keys. Because you've got the option. They give you the option. Do you want to buy it at book value? But these are brand new cars. So the book value is like 25% off what you bought it. I'm like, I can't afford this. Stay with your car. And I've got no attachment. I'm not trying
beyond
to...
the joy of driving a showroom car. Let me ask, I've never driven a showroom car.
It's fantastic.
What's it like? What's it like to drive a showroom car?
You go in, you're given the car, and you drive out.
There's
a certain lawyer.
Like they open the doors.
Actually, the second Touareg was delivered to me. Remember the one where I called and I said I want powder blue.
Yes.
They actually brought it to me, so I never even went to CMC at the time. It was still CMC. They brought it and they're like, here are the keys and everything. So it's very, very nice, but they're expensive. All right. So by the time I was giving out the second bank after I'd left Barclays, and I'm like, here are your keys. Now I went back to my sister, give me that car. Where the window opens, one door, whatever. Because I feel nothing. All right? I don't have to floss for guys that just because I've left this job, my lifestyle is here. My lifestyle is not here. I'm down. But what I have are my savings, and my savings are going to keep me going. And by the time I was leaving the second job, I was very clear in my mind. I was done working for people. I was going to work with people. I didn't know what I was going to do, but I was very clear I didn't want to work again. So I'm driving this Lemon. So I was back to driving a Lemon. Okay, it was a Hyundai. very good on fuel efficiency. You sweat like a star cock. So I remember I was on Uhuru High one time, and you have to open because the driver's
to
door open,
open
but the window doesn't open. So you're actually opening so that air can come in.
Wow.
All right. But I have no debt. All right. When I was leaving Barclays, because we got into what is called a negotiated exit, I was very clear I didn't want to leave with debt. So they paid me, and I said, the funds that you're paying me, don't even let them enter my account. Take them to my mortgage account, and I paid off my mortgage in full so that I can walk away. I've got no money, but
You had a house.
but
And
I
you
have
have
a
no
house.
and you have no debt.
Yeah. And
Okay.
I can't tell people enough why it's important to buy. I keep telling guys, buy, especially the young people in my office, buy a house. Buy a house, buy a house. There's Savo, there's companies that are allowing people to buy houses because you've got capital appreciation that you can leverage off of to add to get incremental property. If you're going to go into debt, I call it assets versus flossets. Get assets, not things that you floss with. So don't buy the damn Subaru. Buy a house. Live in it, rent it. You don't have to buy a house where you want to live at. You want to buy a house in Kileleshwa. Buy a house in Syokimau. Rent it out. Live in Syokimau. There's the expressway. So I could go on and
You can go on
this.
that.
Yeah.
Question. How easy is it to drink your own Kool-Aid, so to speak, and get lost in that high C-suite level of existence where the company is paying for all sorts of things, your car, your fuel, your golf club, your all of these things. And how and what is it that you did, you think, that allowed you to not drink your own Kool-Aid and get lost in that space? If it is easy, because maybe it's not. Maybe it's not easy to get lost in there.
It is easy to get lost. You've got me reflecting because, yes, I was entitled to a club and they paid for my club membership. And yeah, they pay for your car, they pay for its service. You get a very good salary. You get bonuses. In some situations, they'll pay for even your security, your push button, your Securex or G4S. It's a good life, Barak. And maybe the question you should be asking is, what did I do that life? Actually, now I'm sitting, I'm like, hey, I was paid well, man. What the hell was I thinking? But I call them golden handcuffs. And employers are not foolish. They suck you in with this. It's gold. It's a good, they call them the trappings of life. Want to take care of you, then you take care of us. I do board recruitments now, and one I was trying to remember, I was recruiting for a blue chip, and the skills that they wanted, us recruiting for a blue chip company, the skills that they wanted, there were only two people I knew who could be able to deliver on the skills. They're both entrepreneurs of highly successful businesses. And I remember approaching them. Now, I've sat on boards. I've sat on 25 boards in the course of my lifetime. And last year, I stepped off my final board. I was on the EABL board. That was the last board. I said, I'm done working with boards. I want to do something else. I approached these two gentlemen. The first one, and he says, no, Carol, I can't. I'm not interested. And this is a blue chip company, which many people would want to sit on their board. He says, no, I can't. I'm busy. I'm doing expansion right now. We're in Kenya. We're looking to expand in the region. I need to focus on my business right now. Then I approached the second guy. Same thing. He's like, yeah, Carol, it sounds good. It'll look good on paper. It'll be great for my profile. But then I'll be helping them make money. And right now I need to focus on my business and make money for myself. And it hit me like a sledgehammer. I'm like, yeah, I've sat on all of these boards. Fantastic experience. I've absolutely loved them. But I was helping other people grow their business. And in that intervening time, this is my 16th year of working for myself. If I had just given my business the time that I've given these, whatever, even me, I'd be kidogo blue chip by now. It was a huge wake-up call for me. And it was those two entrepreneurs who made me realize I'd already made the decision to step off the boards, but they made me realize how much of my time I had given to other people instead of focusing it on myself. And that's what these trappings do, is they will extract every pound of flesh that they're paying you for. You will sleep, you will eat, you will breathe that company and they're paying you for that, what toll does it take on you as an individual? What toll does it take on your family? If something happens to you, I guarantee you will be replaced in 3 months. There's nobody who's irreplaceable. And so it's I'm not saying stop employment. You must, but you also have to ask yourself, for how long can you do this? And are you planning for the future?
Right.
I've seen people retire and you've got nothing. It scares me.
There's something you've said that's just triggered a question I had, and so I'll ask it. It may not make sense in the chronological order of what we're talking about, but I'll ask it. And it's around CEOs or incoming CEOs and how, I guess the euphemism I can use is they don't like to play with old toys. So like you'll find a big company or a company will have a new leader come in and he'll almost throw away the toys that the CEO beforehand had or the things he had done and try and do his own things. So if I'm to give an example, like with Safaricom, we don't have the jazz stuff anymore, which, I mean, of course, I don't know the internal workings of it, but it seemed like it was working really well. And I know there are a lot of creatives who loved the fact that there was all of that. And then, someone will come in and be like, no, that's not me anymore. And I guess my question from your perspective is it more of an ego thing that takes over whoever is in this space and is like, no, I have to do my thing. They have to see me, even though this was working successfully, whatever? Or is it, I mean, like, what's the thinking behind a lot of that?
I think, Barack, we shouldn't conflate a CEO's vision and a company's vision, right? And a company's strategy. So in some situations, it can be a company strategy that we are promoting the creative art space. And this is in line with our strategy. Because you always ask yourself, what is a company's strategy? And therefore, does everything that they're doing, is it aligned to their strategy? Because that's how companies are. Everything that they're doing must be aligned to their strategy. And so if something is aligned to the strategy that is, and remember, their strategy tends to be 3-year strategy or 5-year strategy.
Yes.
And it could be that a jazz festival, for example, was aligned with their 5-year strategy. That strategy came to an end. And now there's a new strategy. And therefore, what is aligning on our CSR side, on our what we're supporting on from a sustainability perspective, what are we supporting? Is it aligned to our strategy? They never do things, when I say companies, never do things because they're on a whim. You've got stakeholders to manage. You've got shareholders. They don't like whimsical. They have to see how is this aligned to the strategy? How is this impacting the bottom line? Are you moving funds out that could actually come back to us in the form of dividends? We must demonstrate as a company that whatever we're doing will come back to benefit us, either in the form of dollar dividends or in the form of brand dividend, brand visibility, brand love. So I'll push back to you on that and say, I think you need to move it away from thinking that it's CEO driven to thinking that, is it company driven? Is it aligned with what the company? I know I've given I don't want to say a BS answer, but a politically correct answer.
Yes.
But I just want to take you away from thinking that some things are whimsical and driven by an individual, and that some things are actually institutional. And strategies are institutional.
I think where my thought or question is coming from is while I do agree with you and I see the sense in what you're saying around strategy, and maybe the strategy has changed, is of course with power there are some discretionary things that happen. 100%. So for example, in fact, I happened to be watching this yesterday. It's around Manchester United and Alex Ferguson, who they say was the greatest football manager ever. And Roy Keane was talking about how people act like he didn't do anything that wasn't the great interest of Manchester United. But then he goes like, but his son was part of the squad when they won a trophy at some point, and he barely played. And he said, and anyways, he was talking about decisions that he made that clearly were purely discretionary, which were not necessarily merited. So I do know there is that, I mean, there must be that sort of room to be like, yes, I want to achieve this, I want to do this. And that's sort of where the question's coming from. But I do understand what you're saying.
And I'll hold your feet to the fire, Barack, in terms of you've got to be able to, and I'm speaking to you as a lawyer now, lawyer to lawyer, you've got to be able to say, this is a decision we can say is attributable to a CEO.
Yeah.
Vis-a-vis, this is a decision that is attributable to the board. Vis-a-vis, this is a decision that is aligned to a strategy. So unless you're able to say, we know that
For a fact.
A CEO did this, then now we can have that discussion. But unless you're able to pinpoint that, we have to then align everything to it was a company decision. What are we doing as a country today? Every single problem that this country is having, we blame it on
The president.
exactly, because he's the CEO of the country. And yet it might be just a ministerial thing or but because he's the face of the country, it's easier to blame him.
Takes the brand.
Yes,
I guess that's partly what they pay you for then.
100%.
Yeah.
100%.
To be able to get that there.
That's
Anyway,
right.
okay. Back to your story. And I guess the Barclays time. So your life at Barclays, based on what you've told us, at some point you get a mortgage, you're high flying, living a great
I
life.
hate that word, high flying. It's such a cheesy word. What does
But it is,
high
I mean-
flying? The only people who fly high are pilots and there's air.
Well, high flying in
plus
the
the
sense that
passengers.
you're living you're way above average. Way above average.
Who's average?
The average Kenyan does not earn 100,000 Kenyan shillings, right? So, as someone who's driving a showroom car, like you're way above average, right? That's the context with which I'm giving.
Okay.
So, I guess from what you told us, at some point you get a mortgage. Any other financial decisions you make at this point? Any other investments or things you look into before your job begins to turn sour?
In terms of other investments,
Possible
that I
other
made?
investments, yeah.
Yeah. Oh, yes.
For context, for people are
Yes.
wondering, she's struggling, and
Yes.
she did say this from the beginning. I will struggle with giving you any specifics, any specific figures, any specific details. So just bear with her, and I will ask the questions. If she'll answer, we'll sort of move. But okay, so there are investments that you're making at that
Yes,
time.
Yes.
So moving on to the time when your job sort of gets sour, right? And you make the decision to resign. And by the way, if at this point in time you don't know what I'm talking about, please go listen to the Engage Talk, because she does a fantastic job of breaking down the tension and essentially what happens within Barclays. And we don't have time to do that whole thing here. But essentially there's problems. At the point when you're making the decision to resign, do you have a financial buffer? Do you have salaries, the savings to be like, yes, I can have leeway, I can leave, all of those things? Or is it on a whim?
So first of all, you know how I love Martha. She says, I was not taught.
Yes.
So remember, we got into a negotiated exit
Yes.
at Barclays. Okay, so I didn't. Yes, you resign, but you negotiate that exit. Okay, because it's initiated by them. So one of the key things was, how do I ensure that my debt is significantly paid down, and how can I ensure that this payoff pays me off, that I can walk away with the keys to my house, and so that's definitely what I did. I'd also, remember I told you I had the 30% rule. 30% of my net salary
Was being put
away in the form of either it's in an insurance, the policies, or setting aside cash. Now, 30% of net is very high. And I have to say that. Think about it. 30% of your net is a significant part of your gross.
Yes.
So I'd had that discipline and had different kinds of investments in them. And I had to continue that when I stopped working. And started working for myself. Sometimes you have to put packs, especially on standing orders.
Yeah.
You have to put packs on some, but not all. Yeah.
Okay. And what was it like when you're having this negotiated exit? What was it like to, with the anger and frustration that you had, to have to go into a conversation where you're being reduced to numbers, or your input and your effort is being reduced to numbers? How do you have that conversation from a sort of sober standpoint? And I guess you've said your objective was, I do not want to leave with a huge debt.
Yeah.
But how do you handle
that's
that
what
conversation?
You talk about social capital. I tell people you've got social capital, and social capital is how you are, how you have engaged with your peers. So at that point, I was engaging with my peers, the head of HR and the head of legal, who were my peers because we were sitting on the exco together. So we had a very sober, very good conversation because they were talking with a friend and a professional colleague. So we had a really, really good conversation with them.
Okay. So it wasn't that difficult.
It was difficult because, first of all, I'm bitter. I'm bitter and twisted by this point. Like you guys have pushed me against the wall. And you sort of have to ensure that you're not sitting around the table with the protagonist. Okay? You can't sit around the table with the protagonist because then it becomes a personal engagement. So sitting around the table, that's what I'm telling you, with HR, with legal, we then had to, and I had my legal advice and all of that. We were then able to arrive at a fairly fair, it's a double entendre right there, at a fair outcome. What I feel was a fair outcome. They felt it was a fair outcome. We shook hands and I walked away with the skin on my back. Yeah. And my dignity. Because Nairobi is small, Barack. Nairobi is so small. And I tell guys, please don't sue. By the time you're suing your employer, now that is kufa dereva, kufa makanga. If you sue your employer, you will never work again in this town. Nobody wants to touch you because they see you as a litigious employee. Even though you did it for, you were wronged.
You were wronged.
As much as possible, negotiate, mediate, get an arbitrator, do what you can. You're by the time you're pulling the grenade pin and lobbying that I'm suing you, things have come to an end. But be ready not to be employed again.
Yeah.
You can't be.
I mean, my final question on this is based on your experience, right? Because just for context, how you even end up here is you sent a seething email, which I believe the MD or CEO's assistant sort of helps you and retracts it. It doesn't allow it to get to him, but that's the level of anger that you're at. And so my question is, looking back now, when you're looking at this as a possible conflict you're trying to resolve, how much of it is factual, meaning how much of what's angering you is the actual facts of the matter, and how much is just pure emotion, like emotion that you're feeling, that if you take the emotion out, this issue really isn't that serious and there is a solution to this outcome or a solution to this issue.
So what's the question?
So the question is, I'm trying to identify, if you take emotion out of conflicts, how easy is it to solve the conflict? And then, therefore, is it emotion that makes conflicts difficult and the conflicts themselves aren't difficult?
Barack, everyone is a human being. You cannot not have emotions. You're human first.
Yes.
You're human first. One CEO of a media house once said, I loved it. It was, I love it, and I tell people all the time, never bring facts into an emotional argument. Think about you and your wife and the last argument that you had. Let's say she's the one that got emotional. If you go there with facts,
it's going nowhere.
It's going nowhere fast. In fact, if anything, facts are like fuel on a fire. They don't want to hear that. They want you to meet aura for aura. You match with my emotion as well. Bring your emotion as well. Even me, I want to see you angry and crying and screaming,
losing
right?
It, yeah.
So, and that's why people have lawyers. If you look at disputes, you always want to let the lawyers first talk about it, because the protagonist may bring emotion into it. And that's why sometimes it's wise to use lawyers. You'll see in many divorce hearings, for example, let the lawyers talk, let the lawyers come out and panel beat and arrive at what is minimum, irreducible minimums on both sides, and then negotiate. Because you bring in the two protagonists, emotion. In fact, you'll be like, me, I don't like, first of all, the way he's looking at me. Why is he looking at me like that? In fact, remove that.
Yes.
This guy that aroused me, That's emotion. Step out of the room. Let the lawyers negotiate if you can, because you're human beings. So it's difficult to answer that question without admitting to or pandering, not pandering, but agreeing or recognizing that when you have a human being, you have somebody full of emotions, and asking them to remove emotions and deal with facts, that's hard. Maybe you stay with your emotions, bring in a third party, a lawyer,
to deal with the
it.
rest. Okay. Yeah. That's a roundabout fair answer. Okay, so you move on from there, move on to your next engagement where you get the Touareg the blue Touareg that you ask for. Sorry,
Sky blue.
sky blue, the sky blue Touareg that you ask for. What's life during that sort of second phase of working for you like?
So great salary, even better than what I had at Barclays. Life was doing good. In fact, I was about to purchase another house. I actually signed the sale agreement, and then I had to leave. I was asked to leave. And you've signed an agreement on a very nice house, very very nice house in Karen, no less.
What happened that you were asked to leave?
Oh my God! If I tell you, I'll have to kill you. That was a long, painful.
Was it more painful than the first one?
Absolutely. Absolutely. I jumped into this job with my eyes wide shut, and I should have known better. I should have known better. That decision to take on that job was an ego decision rather than a rational decision. It was, okay, I've left Barclays. People need to see that I'm okay. So let me take on this job because I have got to, I've got my career that I've got to maintain and ensure my career doesn't tank. So let me take on this role. Big mistake. And if I had done my due diligence, I would have known. But I wasn't. I was looking for confirmation bias. So I did my due diligence. I asked some people, do you think this is a good idea? No, that's a leading question.
Yes.
Okay. And they can kind of see the desperation in your eyes when you're asking this question, like, say yes, please say yes. So you're looking for confirmation bias. In retrospect, I shouldn't have. But I wasn't mentally ready for it. But sometimes, retrospect, I'm 52 and a half. I'm whispering my age now. It kind of makes, life has now made me look back and say there's nothing like a bad experience. There's just an experience. I don't believe, and I tell my daughters this, there's nothing like a bad experience. God puts you through all experiences that you're supposed to learn, and He'll keep putting you the same experience until you learn the lesson. So sometimes if the same thing is happening to you a number of times, you have to say, like,
there's
okay,
something
God,
that you're not.
What am I not learning here? I needed that second one to make me realize that, no, Carol, the higher you go, the thinner the air. It's very sweet. It's very well paid, but the air is very thin, and you clearly have a values dissonance. The higher you're going, your values are starting to clash, and your values are going to be put into question each time. So make a decision: get out or compromise your values and say, okay. And the fact is, and because I've now worked with so many CEOs, it's hard to be a CEO without being ruthless. You have to be ruthless. You're going to make decisions about people. You're going to make decisions about suppliers. You're going to make decisions that, on the face of it, everyone was like, aha. You mean you can do that to that person? Yes, I have to, for this organization, for the sake, the continuity. And that's what I'm saying. Even looking back at some of the clashes that I had with my bosses, I'm like, they had to make the decision that they had to. Because they're doing it for the organization, not for you. You have to, as we catch feelings, that's why I told you, you can't bring emotions into it. It's just business. Roho safi.
Yeah. Okay. And how long does it take you to realize this was a mistake? And how long does it take you before they ask you to leave, or you get to the leaving discussion?
Probably 4 weeks. Oh, you weren't expecting that?
4 weeks.
Months? Yeah, 4 weeks from, oh shit. Am I allowed to say that on the podcast?
4 weeks.
Yeah. It was terrible. It was fast. Let me tell you, I left that job.
Yeah.
I left that job, got on a flight, went to lick my wounds because I'd just come back from seeing my brother in the States. And I had to, again, because now my ego was bruised beyond. There was nowhere I was going to walk in this town. I can't.
Yeah.
What the heck is going on? There's something wrong with this chick. Went to lick my wounds on the palm-lined streets of Fort Lauderdale, where my brother and his expecting wife were. And I helped them move. And they wanted me to come and help them move. I needed to just get out of town and just, because in your mind, you're thinking everybody is talking about you. Like, this chick, what's up with her? Why can't she hold a job? So you're thinking everybody is talking about, nobody's talking about, they really couldn't care. But in your mind, everyone's talking about you. So I took off, went, helped them to move. And helping them move meant they were both working. They both had day jobs. So I was literally going to the post office box, cancel PO box this and, delivery to here. They're now moving to Wisconsin, change of address, took the car in for the final detailing, go and cancel the service here, go and cancel this, go and cancel that, go to their daughter's school, cancel this, and then sit and watch the movers. Now, the movers, this is an irrelevant story, but I'm going to tell it to you. The way as guys, we get to do cube movers, who, they come a kirede, they come like 10 guys plus a big lorry. There it comes an 18-wheeler, a trailer, a truck with a container on the back. 2 men, the driver and another guy. They come, they park outside. They start packing. My work was to sit on the curb. I used to sit on the curb and just watch them pack. 2 guys, they start in the basement and they work their way up to the kitchen, and then they work their way up to the bedroom 1, bedroom 2, bedroom 3, living room. The 2 of them move the stuff, pack the stuff into boxes, move the stuff in, put it into the container. They push everything in. Then the last thing is the car. They reverse it. Then they drove that truck. So the guy who was helping to pack doesn't get into the truck, just a driver. He drove that truck from Fort Lauderdale all the way north to Wisconsin, to Milwaukee. Gets to the whatever, gets a guy, because it's a company, so they'll get a guy on that side who will then help them unpack. It's amazing to watch. Us guys were operating here, cube movers.
2 guys. How long?
They did it in 2 days. They moved that house, they packed everything, put it in that car in 2 days. 2 guys. Here we've got
10.
Musa and his crew. And you must give them soda and bread at lunchtime.
Yeah. That's incredible. I mean, if a 2-man job, that's something.
Yeah.
Okay. So you go to lick your wounds, essentially.
So when I go to lick, I was there for about 4 weeks, just lying low like an envelope, helping them move, just not thinking. I used to sit under a tree, just watching these guys, or just sit and just stare, just cross the street. What the hell have I done? What am I doing? Why am I in this? Why am I working? Why can't I? Why am I having problems when I'm at this level? It happened the first time. The first time, the second time, I'm like, the problem are not these organizations. Actually, I'm the problem. So maybe let me take a chill pill. Let me take a year out. Let me see how I'm going to negotiate this. The day when I can't buy
the conflicts,
then I'll go and look for Jobo. But right now, let me just figure this thing out.
And what do you do with the house? The agreement you signed. The house.
Oh, that one.
Yeah.
I had to call the lady and tell her, I'm so sorry, but I can't. I need my deposit back. I've lost my job, so I can't buy this house. It was a beautiful property. Beautiful property. Because remember, I've paid off my mortgage on the other one. I can.
So she gave it back to you.
She gave it back to me. Like it was a lady I knew.
Okay. So they didn't go legal.
I told her, no, she didn't go legal. It was like, and it was beautiful. There were only like 10 units, so she had managed to sell like 8. So it wasn't a tea. It wasn't a tea. It was a problem for her to find another buyer.
To find another buyer.
Yeah,
okay.
Yeah.
Wow. All right. So you take your break. You chill. You never run out of money to buy cornflakes. And you start your consulting.
I start my consulting.
Yeah.
I never looked back. So I started the consulting January 2009, and what
trade-offs have you had to make to be comfortable with the life you live now vis-a-vis what you had lived over those 10 years?
You know, Barack, when you're on a salary, if I'm here shooting the breeze talking to Barack and Collins and William, you know that I'll be paid. Eh?
Yeah.
If I decide to go to take a drive to Naivasha, to the Vashas, to see Safari Rally and come back, you know that I'll be paid. On the 24th, there'll be money. Whether I shot the breeze, whether I worked at my desk, on the 24th, there'll be money. When you work for yourself, there's no such thing. You better find where that money is coming from. When you start employing people, you know, I look at them and I'm like, you people, you've never, okay, on the 25th, you guys are paid. Now they've become me. They know that they'll be paid regardless. I'm the one who's stressing and scratching your head and wondering, how am I going to pay? Which client hasn't paid? Do I need to take an overdraft to make the payments? That's a trade-off. The trade-off is that comfort of knowing that on the 24th, you will be paid, whether you faffed about or whether you worked.
Yeah.
It's a huge trade-off, but a good one. Wouldn't do it any other way. It's been 16 years. Love it.
What's been your most difficult financial moment?
Especially during COVID, was making sure that you're able to meet your obligations at the end of every month. You have to, there's a word that became very sexy during COVID, runway. We have to ensure that we have enough runway to survive during the next 6 months. That runway was a big thing because we had a really good Q1, first quarter of 2020, and a strong last quarter. So and because we're in consulting, you do billings, and your billing sometimes can take a while because you've got work in progress. So because we'd had a strong last quarter in 2019 and a good quarter one, those billings were able to take us, because I'm telling you, there was no work coming in quarter 2, 3, and 4 of
2020.
Of 2020, and that was scary. I've never. Again, I told you I'm my mother's daughter, so when I first started my business, I was a tea girl, I was a messenger, I was the one who was cleaning. You're doing everything, because you want to keep your expenses at a bare minimum. And so I got my first employee after 3 years.
After 3 years?
Yes. And I got my first employee because now work was starting to come in, and me, I hate doing invoicing, so you withholding tax, I can't stand it. So I needed somebody to come and help me do that. So I've always kept my expenses quite low as a business. So that year was a scary one. Will I be able to make payroll? I didn't want to. We never.
Did you ever get back to that conflicts moment, so to speak? So whereas at the beginning you said that's when I'll go look for a job, but then you start your business, right? But even as you've been running your business, have you ever gotten to that moment where you cannot afford conflicts?
No, I haven't. I've been lucky.
Yeah.
I think the question you should ask is, have I ever gotten to the point where I've had to remove money from my pocket to fund the business? And that's when I knew. So one of the things I did in between, when I stopped working formally, I had invested in a certain business, and we were 3 investors, and we were doing some work, and the business paid for. We had 2 employees. The business paid for those employees, but the business never paid us, the shareholders. And so when I was starting my consulting, I was very clear: this business has to pay me. I'm not working. So when I look back, and like I said, there's nothing like a bad experience. That particular business taught me there's no way I'm ever going to work for a business that's not paying me, because we worked, and in retrospect, we worked for those 2 employees. We never removed money out of our pocket, but I was working for them. They were not working. Do you get what I'm saying?
Yes.
They were paid a salary every month
from money that you guys
from money that us guys were going out and hustling to get. It's a huge wake-up call. You're like, wait a minute. No. So when I set up my consultants, like, this thing has to pay me. It has to pay me. And when COVID hit, I was like, at the point where I would have to remove money out of, because I've got multiple sources. I consult, I teach at Strathmore, I work set on boards, so I've got different sources of income. And I always tell guys, you always want to be multiple sourced. I never ever had to remove money from my other sources
to put back into the business.
And that was if that happened, then something has to give here. Yeah.
And so even in doing that does that mean that at some point you reduce the business expenses, or you tell guys, the employees that you had?
I've always run a very lean business. And what does a lean business mean? That you look at your employees and see how many of them are income generating or in activity that is leading to income. If you want to ensure that your ratio is more than 50% are in income generating or activities leading to income, and not cost centers, not admin. So I've run a pretty lean
so it
business.
Helps in that sense.
Yes.
Okay. Tell me about how you ended up with the farm. There's a money you lost before you start I don't know if it's sheep or goat, but there's some money that you lose. I think trying to plant.
Let me tell you, farming, you lose money
Yeah.
all the time. let me just break that down to you.
Yeah,
Okay,
yeah.
farming is not for the faint-hearted. And
Yeah.
as we speak right now, it's raining. Jehovah be praised. All right?
Yeah.
It's raining. So I started sheep and goat farming again from my mom. You know, I did the typical thing of you go and you buy a plot of land or two somewhere deep in Nanyuki and then fence it. And then my mom's looking at it. And I was like, I'm never going to grow maize and beans ever. So I said, let me plant trees. Let me regenerate the ecosystem here, because that place there are a lot of absentee farmers, so people had cut trees. Anyway, so I'm, growing trees over there, and my mom is looking at that and saying, you need 2 sheep over here. You can't just have all of this grass and there's no sheep eating. I'm like, Mom, I don't want to deal with this. Just get 2 sheep. So you got a guy who's already looking after it. Anyway, long story short, those sheep, they breed like rats. So I'm like, hiya, you mean this thing can be a thing? And then now every Christmas we're eating my sheep, and I'm like,
yes.
and they're not bad, eh? And you're like, this thing can be a thing, eh?
Yeah.
So then I said, okay, let me bring a doper, a good breed, a good ram, and then the rest is history. So I wanted it to become, so now I've brought in a professional, okay? Because the problem with us Africans, we think we know everything. So I'm like, I'm done. I'm bringing in a professional. So I've brought in a professional farm manager who's studied animal husbandry, so knows how to take care of sheep, how to breed, how to grow a flock, and knows how to grow food for that. Yeah. I'm not making any money from it though.
Yet.
But that's my plan.
Yes.
Within the next year, I need to be
making money from it.
Yeah.
Okay. Do you think with a career path a career path in life that you've chosen and I guess things that have happened, whether directly or indirectly, do you think you've made the most amount of money you possibly could have made? This is a question you had beforehand, right?
No, you didn't give me this question. But
Are you sure? I feel
let's-
like you did.
Let's
Anyway.
flow. Let's go with your flow.
Do you feel like you've made the most amount of money you potentially could have made in your life up until this point?
No.
You've left money on the table.
Oh yeah.
Yeah.
Yeah. And yes, I've definitely left money on the table, and there's still time to so first of all, I wish I had the energy that I had in my 30s with the knowledge that I have in my 50s. I would be way up there. If I have that energy
And
with
your
the knowledge,
knowledge
with
you
the
have now.
experience that I have now. Now I have the experience, want to do a heck of a lot more, but don't have the energy for it because your mind is not at that level.
I have a question for you on that, in the middle of your story. Because this I got from some, I don't know, it was a Twitter thing that I read, something I read somewhere. If you didn't know how old you are, how old do you think you'd be?
Right now?
Yeah, like if you woke up and you didn't know how old you are, based on your habits and your mannerisms, how old do you think you'd be?
40, 41.
Yeah. Why not 30s? Like, why you... I guess the way I'm getting at is how come...
Because I was young and foolish in my 30s. I'm serious.
Yeah.
I had technical knowledge. I knew banking very, very well, but I didn't have emotional intelligence. I was foolish, idiotic, nonsensical. Yeah.
There's so many words.
Totally.
Yeah.
Yeah. But now, that 10 years, my decade of my 30s was a lot of character development from an emotional intelligence
Perspective.
Yeah.
Okay.
Yeah.
So if you were to try and this may be difficult, try and surmise for me decisions or things you would have done differently that you think are the decisions that led you to leaving money on the table. Like, what would you have done differently to not leave money on the table?
Regrets, no. Barack, I've no regrets. No regrets. Because no, I have no regrets about money decisions made. I'm actually quite comfortable with the decisions that I made. I sold what needed to be sold when it needed to be sold. My only regret are time regrets. As a consultant, the only thing you have to sell is your time. You know, if you're manufacturing this table, I can manufacture 50 tables. And whether or not I'm in this room, I've got somebody to sell them. When you're a consultant, the only thing that you have to sell is your time. And I think I gave up too much of my time in the last 15 years to helping other people solve their problems instead of focusing on my business. If I'd focused on my business, that's what I'm talking about.
Okay.
That's the money I
That you've
left
left on the table. Okay.
Yeah.
What do you, as we're sort of wrapping up now, if you were to narrow down the skill set or skill sets that allow you to make money, what do you think they'd be? Like the things that actually allow you to make money, or the things that you're really good at that people pay for, and not just pay for, but also allow you to make money. Maybe I can give a bit more context to this question. It's like, you are a doctor or a lawyer or engineer or a marketer, whatever the case is, and you're paid a salary for a job. But there's a difference between being paid for a job and your ability to make money, your ability to exponentially increase your income, whether it is from your employer, sourcing it from your employer, whether it is the same way the bankers where you were, guys who are getting to Barclays at 19 years old and making the right decisions and allowed them to make a lot more money than they were quote unquote earning. So in that context, my question is, what's the skill set, if you could narrow it down, that has allowed you to make money, if you're able to crystallize it?
My mouth. I talk, I train.
Yeah.
And that's a lot of that's where I'm currently focused on in a lot of my training. So I'm training at Strathmore, I've got training my own clients. And so it's about bringing my knowledge and being able to impart it to a client base that appreciates it. Yeah.
Okay. So essentially, it takes lots of research, a lot of understanding, lots of reading and all of that to be able to allow you to
That's right.
express this skill.
And also being able to deliver it in a way that leaves your clients happy and yearning for more. Yeah, the delivery is also as important.
Okay.
So half of it is the research, but how do you deliver it?
And then, of course, there's experience that you have to have gone through some extent to be able to
Absolutely
do it in the way that you do it.
Yeah.
Okay. My last question is a question I'm pulling off of one of your TED Talks, and you said you won't answer, but we'll see if you will.
Give it your best shot.
I will. You talk about going to the movies with a young boy.
Oh my God.
You talk about going to the movies with a young boy, and you say, I think at the end of the TED Talk, you say, men have been missing nonverbal cues for the since 1980 something.
1986.
Yeah. And you said men have been missing social cues, nonverbal cues since 1986. So I guess my question is that still relevant even now? I mean, have they missed social cues for essentially 53 years?
There's a whole book that's been written that men are from...
Is it Mars?
Men are from Mars and women are from Venus.
Yeah.
Okay.
So does money have anything to do with it?
Of course not.
Really?
No.
I mean, they said money is like one of the greatest factors of divorce and breakups and all those things.
Yeah, but remember you're talking, remember I asked you at the beginning, I said, what's love got to do with it? Why are you conflating love and money? I think the two are mutually exclusive. Yeah. Look at you. I got you.
Fair enough.
They're mutually exclusive. I don't see what one has to do with the other. Absolutely.
You think you can have love without money? You think you can have money without love?
What's love? First of all, can we even deconstruct what is love?
Love is companionship. Companionship
is not love.
Love encompasses companionship. It encompasses
we've been
emotion.
sold a premise, again, by those people who came on a ship. I keep looking back at my great-grandfather. Okay. Did he fall in love with my great-grandmother? Or did he look at a beautiful girl and say, this one can be my companion? And this one can sire me, I can sire children and can give children to me. You see what I'm saying? I look at my grandfathers on both sides and my grandmothers. Was it love that got them together? Or was it, yes, this one comes from a good family, this one will be, was it functional? I know I'm being a bit controversial, but I'm like, I feel that we've been sold a story. I feel like we've been sold a story. And I could go on
It's
and on
okay.
about this.
All right.
Yeah.
Fair enough. Last question. Do you have more money than people think you have?
That's so not a fair question. What do you mean? Do I have more
Like
money
I
than
thought, like
people?
when I saw your LinkedIn profile, I was like, yeah, I mean, and I saw the boards you've sat on and all the things, and I was like, yeah, she must have a lot of money. You have a daughter in the States who's studying.
What's a lot of money to you might not be what's a lot
No,
of
it
money
might
to me.
exactly. That's why I'm asking.
Yes.
Do you
So,
do you? That's why I'm
So,
asking.
but
It's
this
all
perception-
subjective.
and perception.
Yes, it's all subjective.
Exactly.
So the question now I'm asking the object, right? Do you think?
Yes.
Do people think you have more money than you actually have?
Which people?
People like me who looked at.
But
the
you
LinkedIn
just said
profile.
you looked at my
Yeah,
LinkedIn
and I thought,
profile
yeah,
and
you
you
must
thought
have-
that
you
I-
must
that
have a
must
lot of money.
And
Yeah,
that's
you
all
must.
perception. Remember, I told you that having worked in the banking industry, I can show you a guy who's flossing.
Exactly, which is
All right, and if you take nothing away from our conversation today, I want you to take something, because again, I worked in the banking industry. Money shouts, wealth whispers. And some of the wealthiest people, you will not, they don't dress in, they don't wear expensive belts or jackets or clothes. But when you look at their net worth, my God, their net worth is the size of some of the counties in terms of county revenue in this whatever
country. Yeah.
They are very undercover. So I'm not a big believer in perception. So yes, maybe somebody can look, but actually I'm nowhere near what wealth, and that's in this country. There are high net worth individuals in this country who, sure, you will completely dismiss.
Yeah.
Yeah. Money shouts,
Wealth
wealth
whispers.
whispers.
You have a lot of corporate PR training.
What is corporate PR training?
Corporate
I
PR
feel
training.
attacked.
There's another person who we had on the podcast. I'm trying to remember who had the guy from Meta, who had really well crafted PR politically correct answers.
So he was media trained.
Yes, so where he's answered, but he's not answered,
Yes.
but he's given an
He's
answer.
media trained. So do you
Yeah.
feel like I've done
Oh
that
yeah,
to you?
yeah. With that question, 100%. 100%. But it's reminded me of one thing I wanted to ask you, because again, you've talked about, not here but before, about you working with now family businesses and helping them structure their corporate business, the corporate governance within their
yes.
companies. How many, in your estimation, your experience guesstimate, how many of these family sort of companies are there that are family owned and are doing crazy turnovers?
Many
more than you'd imagine.
Many, but are doing it so undercover. They're doing it so undercover. Barack, in my business, you start to understand that the people who are shouting loudest, and you see them always in the media and flossing and talking about how their business is doing well, nah, they're not. But they want you to think that. There's a whole perception that they're working towards. Yeah. That's always, for me, it's a red herring. It's a big alarm bell. There are many companies that are operating below the radar, turning over billions, and you will never know, and making a huge impact in this economy, but you will never know. And they don't want you to know.
Favorite money story? Favorite money moment? Maybe that would be a question. A lot of people talk about, especially things with like their parents and childhood. It's not about a lot of money per se, but just a time when a money moment brought you happiness.
When my older daughter managed, when she decided, she said she wanted to take a gap year. And I was very anti it. And I said, if you're only going to take a gap year if you're going to work. That was between high school and university. And I said, you will take a gap year on condition you work. And because I knew she was going to university, I said, and you will manage the budget of this homestead. So this is the amount of money I spend on utilities, on buying the house shopping, and on, this Sunday lunches, these 2 pizzas and everything that you guys want. Boom. Open an account for her, banked the funds in her account. Let me tell you, that chick cooled lock, eh? The first month she was like, Mom, within 2 weeks, she had blown through it. Okay? Totally blown through it. I'm like, And that there's no eggs, there's no what. We'll operate like that until the end of the month. No,
Because there's no mama kind.
in the second month, this girl managed to smoke out, shall I say, issues that were going on in the way things were being procured in the home.
Yes.
She smoked it out, not me. Because for me, I had delegated a lot of these things. And so she was the one who highlighted some, let's just say, some funny issues that were ongoing in my own home, because she was now the keeper of the purse.
Yes.
She is a brilliant money manager. I don't know whether it's as a result of that or because of that or in spite of that. So when I go to see her, she's a brilliant, and her saving ethic is, she's a much better saver than I am. And I tell her that all the time.
Yeah.
That's one of my favorite stories.
That's
So I
a
always
good
tell
one.
guys, if you can, with your kids at an early age, maybe when they've just finished university, give them the house budget, put it in their bank account and say, sort. Have a very different conversation.
My mom actually did that for us. That's really interesting.
Oh, really?
Yeah.
She made you become
when we were about 16, 17, each and every one of my brothers, we were the ones who would do the house. Like, she'd be like, this is, and so us, it was house shopping, university fees, everything. She's like, this is the money, excess fees is coming up, and like, plan it. Yeah.
Excellent.
Yeah.
And what did that do for you?
Yeah, I mean, I think it's helped me, It's helped me. I haven't fallen into any, I don't owe nobody money. I don't get in any of those situations, but yeah, definitely helped. But yeah, so interesting story there. Anyway, thank you guys for listening. I've really enjoyed this episode. I think it's been a fun conversation. And we will see you guys next week on the next episode of Financially Incorrect.